Hi, Tracy Tharaman. Welcome to Euronews' new world headquarters in Lyon, France, and to Real Economy's look at the European growth story. Is it reliable and is it back for good? We'll put those questions and all you want to know about growth where you are to the European Commissioner for Economic Affairs, Pierre Moscovici. We'll head off to Poland to find out what kind of signals our industry is giving us for the future, and then jet off to Germany to talk to the Central Bank of Europe's biggest exporter about the potential risks to a feel-good story that's just started. One growth indicator is our employment, and that's steadily improving. 9.5% in Europe, 11% in the Eurozone. In most countries, that unemployment rate is falling, with the biggest drops seen in Slovakia, Spain and Ireland. It's only risen in 4 countries, and that's just one growth indicator. Let's get a few more in our crash course.
The signs of growth are finally here. But just like in the first laps of a race, caution, strategy and sometimes difficulties can put competitors at different speeds. GDP, the speed gauge for our countries, is up in both the Eurozone area and the EU compared to last year, except in France, where it's stable. Speeding into the highest growth category, Latvia, Malta, the Czech Republic and Spain. The other indicators that get our race cars running are showing strong performances too. What households consume is rising, what we export is up, what we import is also growing. So maybe the race still has many laps to go, but it's off to a slow but steady start.
Another indicator is how our industry is doing, for which we use the Industrial Production Index. This basically identifies turning points in economic development quite early by reflecting how much value is being added in different industries. This index is now showing signs of life, some strong, others slowly improving. Monica Pinner's trip to Poland highlighted both.
Industry is the backbone of Europe's economy. It produces 80% of Europe's exports, and those exports are driving our recovery. In Poland, for example, one of Europe's emerging economies, GDP and industrial production growth are both up. To understand what's driving this, we decided to get the perspective of one of Poland's leading companies, the main national supplier of city buses and a key exporter in Europe.
Seeing our results, our sales within the last years, we do not see big drop down of the sales. It was possible due to our presence in many countries, in many markets in Europe, and not only in Europe. So at the market where the needs, where the procurement dropped down, we were watching, looking for the customer, looking for the special products.
Companies like Solaris are key to the European economy, as the automotive industry provides jobs for 12 million people in Europe and accounts for 4% of the EU's GDP. The evolution of industrial production indicates that Europe has started growing again, but also that this growth is happening at different speeds in different countries. Some nations like France, the Netherlands and Estonia show negative industrial production, while EU emerging markets in particular, like Poland and the Czech Republic, are growing. What track is growth following in the 28 member states compared to the Eurozone? We posed the question to Tadeusz Kowalski, professor at the Poznan University of Economics and Business, while taking a tour of the city.
Such countries like Hungary, the Czech Republic and Poland are still much less developed than the core European countries. The pace of catching up is pretty fast, but we have to be realistic. I think we need at least 2 decades to reach productivity level of the average GDP per head for the developed Europe.
About half the sectors in the Eurozone are still in recession. In Central Europe, all sectors are in expansion, although the stages differ from sector to sector.
Joining us on the show is the European Commissioner for Economic and Financial Affairs, Pierre Moscovici. Different parts of Europe really firing at different cylinders. Does that bring the veracity of the recovery, in your eyes, into question?
No. Europe is now in a clear, sound, robust recovery. The problem is that this recovery is first sluggish and second unequal between euro area member states and non-euro area member states.
Why do you think there's a difference?
Because the euro area had to adapt more during the crisis because the rules are tighter. When you look at the growth forecast, the last we delivered a few months ago, we're going to deliver the next ones beginning of November. The gap is only by 0.2 or 0.3%. It was double in the last years.
Well, a lot of the growth initiatives were also towards the Eurozone, as you rightly said, the ECB's quantitative easing being one of them. What happens if the ECB has to pull back?
I'm confident that the quantitative easing program will last as long as necessary. So I'm not worried about any kind of interruption. But monetary policy is not all. We need to have a multi-function policy. First, fiscal consolidation. It has to go on. Second, it's about structural reforms. Third, it's investment. And fourth is monetary policy. If we've got those four pillars, then we have a strong assets for growth.
What's the backup plan if that attitude has to change?
I was never the what-if guy. The ECB is there for long-lasting policy. Some fears must be based on risks. There is no risk there. It's not because the recovery is there that we need to slow down the reforms, especially of the labor market, but not only about pension systems.
Any countries in particular that you think are lagging behind and causing that internal threat to be
No, I'm not going to pinpoint one country or another. We know which country need more efforts, there's no doubt about that. I know some of them. And the second risk is about investment. We need more investment in Europe. How can we be the more innovative and competitive economy in the world in a decade to come, even if emerging countries are now suffering, if we are not capable to invest?
Commissioner, on that note, I'd like to take a small pause in our conversation
Okay.
and head with Guillaume Desjardins to Germany, Europe's biggest exporter and a barometer of the external threats to this very fragile growth story. And that threat could come from this slowdown we're seeing in the Chinese economy, amongst many other emerging markets.
Rainer Hunsdorfer is a man who knows something about making the parts that make your machines stay cool and exports them around the globe. The company he runs had only 35 employees when it started, and today that number has jumped to more than 12,000 people, selling his products in every corner of the world.
IBM Papst sells 75% of the products outside of Germany. Italy and France is growing rapidly. Germany is good, or let's say okay. North America is okay. China is slowing down but still growing. But the rest of Asia is doing quite well.
All these exports mean more jobs in Europe. But recently the Chinese economy has slowed down, and the worry is what happens if consumer demand there slows down even more. Another problem could be oil exporting countries like Russia and Brazil, whose economies have been hit by a 57% fall in oil prices over the past 16 months. And the wheel could slow down even more for Brazil, Russia, India, China and South Africa. China, Russia and Brazil. Altogether they represent 18% of Europe's exports. But if BRICS, as they're called, stop buying our products, who will we sell them to? Germany's central bank isn't worried yet and believes the troubles in emerging markets won't hurt Europe's recovery.
With regard to the domestic factors, we have low energy prices, nearly zero inflation that provides a real stimulus to real incomes and real wages. And then we have double-digit investment rates in some countries in machinery, for example, in Portugal, in Spain and Ireland. Are companies in specific sectors that will feel a slowdown in China much more than companies in other sectors. For example, 6% of all German exports go to China, But with regard to the car industry, it's 10% of their exports. With regard to machinery, it's 10%. And if there are companies that have not well diversified foreign markets, then they will feel a slowdown in China more than other companies.
The Bundesbank has done its homework and believes the BRICS will see a decline in growth, but that won't lead to a recession.
This would lead to a reduction in the growth rate in the euro area of 0.2 percentage points. So this is not that much. What of course can also come along with a more severe slowdown is heightened uncertainty, volatility on financial markets.
That means we need to keep an open mind, always look for new markets.
That strategy ties in with the Bundesbank's opinion that China will remain an important partner despite the risks.
Still with us is Commissioner Moscovici. Does China worry you? Are we too dependent?
I would say, of course, China is in a period of transition. In our forecast for 2015, I see no effect. And in 2016, probably China will be mentioned as a downside risk, but it won't be of high importance. And we feel that the global economy needs to watch China, that there needs to be structural reforms there, and they need to communicate better. But no worry for the European economy, I would say, globally.
What does our position look like with Russia, say, going forward?
Russia is entering into a deep recession and, of course, needs structural reforms. It's preferable for Russia and for the world that the reforms are made, that this economy is stronger. Of course, I would prefer that. But I see little vulnerability for Europe. Our problems are mostly, I would say, internal. Our problem for Europe is to develop the drivers of a stronger economy. The problem is that our potential growth for the next decade, 10 years, if we don't change those drivers, is at 1% a year. It's solid, but is that enough? No, it's certainly not enough. We need to trade more in favor of free trade reasonably if the agreements are well negotiated. I'm concerned about problems which are non-economical but linked to growth, obviously, which are the growth of nationalism, xenophobia, and the fear for a lot of Europeans that Europe is no more a solution but a problem. I want Europe to be a solution.
Commissioner, on that note, thank you very much for your time, and thank you for watching. Goodbye.